Good evening, everyone. Welcome to Hit the Bid here on November 23rd. This is Ty Robbie here through Week 47 Market Watch. Today we're going to run through our charts and see what happened across the markets over the last week and be on the lookout for any opportunities waiting for us as we move into Week 47. Let's jump right in here and get started. First up, we have our February live cattle. Last week was another week of downside here for this cattle market. Both feeders and fats pushed lower most of the week. We did see here on this February live contract, we opened up with a nice little rally here off of that long-term support line at that 200-day average again. Monday's action finishing above that prior Friday's high. Then we did kind of stall out there on Tuesday before continuing that sell-off, making new lows here in this live cattle market. Tuesday, Wednesday, and Thursday's action, we just saw a nice steady selling activity going on all the way down here and testing these prior week lows. Coming into the session on Friday, we did have a pretty nasty gap down here, opening down there at around 210.5 before flushing all the way down towards 208. We did have a pretty strong rally though on Friday with this gap down and recovery here. This is a pretty typical sign of a short-term recovery and a short-term bottoming type effect. Usually a nasty gap down that gets bought up on heavy volume is usually a pretty good indicator of some near-term bottoming action. However, we still have some news out there that could cause some more volatility and a little bit more of a shakeup in this market, so we want to continue to be cautious here, not really betting on this thing being a long-term low to trade around. But at the moment, this market looks with that gap down and rally looking like we could be in the cards, or a relief rally could be in the cards here for this cattle market. Not a whole lot of upside is to be expected. As we've discussed over the last few weeks, we do have lots of overhead supply. Sellers are still in control here in this big picture downtrend. Bulls want to try and take this thing above Friday's high there at 217.15. If they're able to get some bids up there, they're going to try and retest some of these prior highs we put in over the last couple of weeks. Maybe pull back up into these moving averages. However, the selling pressure has been pretty strong recently that we haven't even been able to get back up to this 20. So at the moment, the sellers are in control and the upside is going to be limited here. Look for the bulls to try and fight back there above 217. However, we do have some pretty heavy volume coming in with this market having a nice little shelf here between 214 and 217. With that finish kind of pulling back there on Friday, kind of finishing down there near 214.42. That will be our bear pivot as we move into the week. We want to be cautious of continued offers down here below 214.40. If we do, a lot of this volume here from the late part of the week is going to start folding again and continue pushing this market lower. Big picture downtrend still remains intact. We expect the bears to keep on pushing here. This market's got a very big uphill battle here to climb out of. Relief rally could be in the cards here for the week ahead, so look for bids above 217 to try and take us back up to this 20-day moving average. We expect to see sellers step in and some of this overhead supply keep price capped, not really looking to make any major recoveries here. But if we do get that relief rally, look for the 220s to low 220s to mid 220s to offer some good resistance in the week ahead. But look for the bears to keep on pushing as this downtrend remains intact, and the bears are in control here. We should see this market continue drifting lower. Similar action over in the feeder markets. Last week we did see a nice little rally on Monday, but did continue with that downside throughout the rest of the week. A little pause day here on Tuesday opened the door to a nice little sell-off. We did see Wednesday and Thursday's action closing red before that big gap down here on Friday as well in this feeder market. January feeders opened just off of the limit down move. We did briefly test limit there during that opening range, but once again this market bouncing back, showing some potential signs of a near-term bottom here with that big nasty gap down and recovery on volume there on Friday. So the bulls, if they want to see a short-term bottom come in here and get a relief rally underway, they do need to continue with some bids above 317 as we move into next week. Bulls are going to have an uphill battle though, however. Like that fat cattle market, we do have lots of overhead supply, plenty of sellers left up here in the 320s to 330s, so it's not going to be an easy climb out of there. We do expect to see any relief rallies that come up into these major moving averages to be sold into. Look for the bears to get aggressive up here near 330, and as this market, if this market does come back here and try and retest some of these prior week highs, expect to see the sellers get aggressive up here around 330 to 340. That should get this, if we do rally up into there, that should get that big picture downtrend rolling once again and push this market lower. However, if we don't even get much of a rally here, we could see offers down here below 313.60. once again, pretty sharp concentration of volume here coming in around this 317 to 315 area. So if we do start to push away from Friday's closing price down there around 313.16 and below it, look for everyone to start folding any longs that were in this market from Friday. They should start folding and get this market to keep on pressing lower. Big picture downtrend remains intact. Like I said, this does look like a near-term bottoming type action with that gap down and rally on Friday, but the bulls have their work cut out for them. Lots of overhead supply here. Also some news regarding some packing plants over the weekend, sure to add some volatility to this market that is already seeing very elevated levels of volatility, so we'd encourage everyone to remain cautious. We're going to have some wide ranges trading still here and potentially some more downside to come. Relief rallies above 317 are expected in the week ahead, except we do anticipate sellers to remain aggressive up here and any rallies to be sold into. If there isn't much of a rally attempt here early this week and we do just get more offers down here below 313.60, we should see that selling pressure just keep on pushing down here towards that $3 mark and potentially beyond. So look for the bears to keep on pushing this market lower. Sellers are in control here at the moment. Good time to remain defensive and cautious while this market continues to bleed. Let's jump over to the corn futures now. Last week we did see a little bit more range-bound action early. We did see Monday rallying up here into those range highs near 437 before pulling all the way back down into the close. Friday's action trading right around that 50-day moving average and getting a couple consecutive closing prices, closes down here below that 427 mark. 427 to 437 being the range we've traded in over the last few weeks with a brief poke above it that was immediately rejected. On our long-term charts like we looked at last week, we can see how this market is showing plenty of rejection up here. A lot of 4 consecutive weeks here with these wicks that go up here into the 430s and up near 440. Lots of rejection. These long wicks here showing lots of rejection from those higher prices. Last week's close finishing down here at 425 3/4 is opening the doors for the bears to get a down move pushing lower here. So as we move into week 47, we want to be cautious here from the long standpoint. Bulls are going to have their work cut out for them here as well. The best chance they got here is to find some support at that 50-day moving average and get some bids above Friday's high. That'll push this market back up here into this range and keep this market trading sideways for a little bit. But if we do get early offers in the week ahead down here below 424, look for this thing to start selling back down here towards 410. All this all these buyers that had been in this market near these range lows over the past 4 weeks are going to start feeling the pressure and start to fold here. If we do get offers down here below 424, it's going to get the selling pressure to kick in and send this market back down here towards these prior swing lows around the 410 mark. So be cautious here. Look for the sellers to try and get aggressive early this week in this corn market. If they're not able to continue pushing down here below last week's low and that 50-day moving average, expect this sticky, choppy action to continue in this corn market. Next up, crude oil prices with a nice move lower last week. This market has just kind of been following this nice little downtrend channel over the last month or so here. No major downside, but a nice slow bleed lower over the last 4 or 5 weeks has got this market to come off of this recent high from October back there around 62.5. all the way down to last week's closing price, just shy of $58. At the moment, bears are still in control here. We do have this big picture downtrend. Just very little volatility in this oil market at the moment, so it's just a nice slow bleed lower here. This crude oil market has been pretty comfortable around the $60 mark, so wouldn't be surprised to see more sticky action in the week ahead after we had 3 straight days of downside to finish last week. This market opened up last week here just below these moving averages, had a brief rally up there towards that 50 before seeing Wednesday and Thursday, Friday's action slide all the way down here to the bottom end of this trend channel. With that little bounce there we saw late on Friday, wouldn't be surprised to see this market start to chop up and get sticky again like we have seen here in prior weeks. Look for this market to kind of settle up here around this $59 to $60 mark and maybe retest the top end of this trend channel. If the bears are able to get some early offers next week down here below 57.38, which was Friday's low, that could really kick in the selling pressure and pick up some volatility. If they are able to squeeze out the bottom end of this trend channel, could push us down here towards this $55 to $56 mark, which were these prior swing lows dating back to this spring and October as well. That has been a spot where we've seen the buyers get aggressive and snap this market out of here at this mid-50s. So bears are going to have a tough time chewing through that level. So at the moment, with this market just being pretty quiet, Pretty sticky action with very little volatility. Expect this thing to continue chopping up with some very low volatility action in the week ahead and rally back here towards the top end of this trend channel. Still going to see a general bleed lower here, slow bleed lower here in this crude oil market as the bears are still in control. But look for this thing just to kind of balance out here for a little bit and work towards the top end of this trend channel once again, and just keep this slow, steady bleed going here into the end of the year. Next up, we have our equity markets. We did see our equity indexes with some weakening action last week. Some distribution days here, especially with Thursday's action with that brief rally following the NVIDIA earnings that was sold into immediately. Big sell-off late last week, steady grind lower all week long. Pretty good back and forth action though in the middle of it as this market is starting to see a little bit of an uptick in volatility here. At the moment, looks like a lot of our mega caps are starting to roll over and show some distribution, looking like this might be a good time to, like we said last week, good time to get defensive and raise some cash here. This market may start to sell off a little bit. Not really expecting any major bearish moves, but we are definitely in correction territory. We've had over a 40% rally from the April lows all the way to the new all-time highs we put in last month. So this market is long overdue for a bit of a corrective move after about 8 months of a rally here. Look for the selling pressure to stay steady this week, trying to keep on grinding lower. We have some pretty wide ranges here for our pivot points. This market is going to have to recover that 50-day moving average and show a solid close above it. And bonus points if we are able to get back above Thursday's high. It's going to be a tough climb back out of there, though, so we expect to see, as long as we're trading below this 50-day moving average, to see the bears kind of be in control here for a little bit. Look for the selling pressure to kick in this week and start pushing back down here towards this prior week's low. Continued offers down here below 65.25 should get the sellers rolling and start heading down here towards this 200-day moving average. This market's going to, if we do get continued offers down here below our bear pivot, this market's going to try and retest the long-term support line here and try and find some deep value plays. An 8 to 10% correction is going to be a very healthy move for this market, something that we could see some good discounts and offer some good long-term value plays in some of those mega cap names. We expect to see this dip get bought up here in weeks to come. It's not going to be a quick, easy reversal back from here, but the good little corrective move here would be very healthy for this market and shake out some of these loose leaves and before we get this big picture uptrend rolling again. We still have a very healthy environment for stocks. This market is going to continue grinding higher over the long term, just near term, looking for a little bit of a corrective move here and look for this equity market, both S&P and the NASDAQ selling off. The Dow has been the strongest recently, but it is also trading down here below the 50 as well. So each of these equity indexes, especially the tech sectors where we're seeing the most weakness, is probably just due for a bit of a corrective move, a little bit of a pullback here. Going to be looking for this market to start coming down here into this 200-day moving average, where we should expect to see some support anywhere from there all the way to these prior all-time highs from last year around the 6160 area. So we do have some downside targets to look forward to if we do get continued downside in the week ahead. But in the meantime, until we get to solid recovery here and some good structure to trade around, I encourage everyone to reduce their exposure a little bit and raise cash, get a little defensive here while this market is going into more of a corrective type phase. But we should be looking forward to some good dip buying opportunities to come in the weeks ahead. I just want to make sure everyone's slow playing this, and we're going to stay out of the way while this market is correcting here over the next couple weeks to come. So remain defensive. This should lead to some good buying opportunities, but we need to be patient and wait for them to show themselves. So in the meantime, look for these equity markets to keep cooling off, and we'll be sitting on the sidelines waiting for a good buying opportunity to get this uptrend rolling again. That's all we got for the week ahead. It is going to be a short week with the Thanksgiving holiday coming up. Only going to be a couple nights of closing comments this week. So, and with the holiday week, not a whole lot of volatility to be expected, but definitely just want to keep an eye on some of these things as we move into week 47. So thank you everyone for tuning in. We'll be catching you guys tomorrow night for closing comments. Have a good evening.